Have you ever heard the saying that we are stronger as a team? How does that saying go? Together we stand, divided we fall. I'm not sure, but these words may have come to my mind because I wrote them after a pretty divided election night. I don't expect we can all agree, but we should work together to make things better. I'm normally an optimist, but in this case, I'm more of a contrarian. My optimism of a divided people working together has taken a hit in the last decade or so. Will it get better? Maybe. I'm not so sure. What I am sure of, it's time for Market Update. Hello, I'm Jeff Moss, and welcome to All the Right Moves. One other thing we can be certain of is that the rates have been going up. This chart is a little dated, and rates are already a little higher. When interest rates are up, it causes uncertainty in the economy. Interest rates on home loans are going up as a reaction to the Federal Reserve reaching into their only tool in the tool belt to fight inflation, and that's raising rates. Anyone notice prices are crazy high compared to 2 years ago? Everything is higher. When inflation goes up, interest rates will follow. I think Mark Fleming of First American is onto something when he says, when the economic uncertainty dust settles, those buyers and sellers who were on the sideline will jump back into the housing game. Demographic trends support elevated purchase demand in the years to come, so it's a question of when, not if, for the housing market. According to Oded Akushi, another First American economist, the aim of Fed tightening is to curtail demand in an effort to tame inflation. And when it comes to the housing market, the Fed's actions are working. Home sales, both new and existing, are falling. Builders have cut back production in response to rapidly declining affordability. And annual house price growth has slowed from the peak of nearly 21% in March of this year to 16.7% in July. And if you're a buyer, there'll be some great opportunities while rates are high. Once rates start to drop, prices will go back up. There's a saying in the industry, date the rate and marry the house. That means since rates are high, you don't have to keep it forever. Pick the house you love and buy it. Rates will be back down in about 12 to 18 months, and you can refinance then. A way to buy a home while rates are high is using a loan called a 2-1 buydown. Not all lenders offer it. The other concern of most people, besides interest rates, is price depreciation. We'll see some price depreciation, but that's good for buyers. Don't try to predict the market. If you don't buy at the bottom, you still have a house you love and payments you can live with until rates drop. What will prices do? Well, let's check with Ivy Zelman of Zelman Associates. U.S. home prices will fall 4% in 2023 and then another 5% in 2024. Not much of a decline. Some houses may even stay level in value due to supply and demand. The popular homes and the ones in the lower price range will continue to sell while others don't. And the news may seem like an endless loop of uncertainty right now. Like most things in life, that's subject to change. And on that don't worry note, that's it for our show. Thanks for watching. We'll see you next time on All the Right Moves with Jeff Moss.